Hi, I'm Matt Wacher, Chief Investment Officer at Morningstar Investment Management. Welcome to the Morningstar Market Minute, a video series where we explore markets, the economy, and other notable trends. There's been quite a bit of volatility in markets this week, with technology stocks, in particular the software sector, experiencing the market's ire as investors contemplate artificial intelligence making SaaS businesses, software as a service businesses, redundant sometime in the near future. In fact, the US software sector is down over 25% from its recent high, led lower by big companies like Microsoft, Oracle, and Salesforce, but many others as well. Broadly speaking, across markets, valuations are still quite expensive, especially in the equity markets, but this volatility is creating pockets of interest and bargains may start to appear soon. Aside from the stock market, volatility across the board was present earlier this week as asset classes, including the likes of gold, silver, and other precious metals, all selling off significantly. We saw a recovery in gold and silver prices midweek, but prices are still well off their recent highs. Even so, gold and silver have had a stellar run over the last 12 to 18 months as investors remain nervous about global debt levels, currency debasement, and of course geopolitics. Closer to home, the RBA raised rates this week, which was much expected, with the markets pricing in more rate rises to come. The RBA's really remained true to the phrase data-driven, and we'll be hoping that inflation numbers do come under control again sometime soon, or they'll continue to have to push rates higher. This rise in interest rates and the expectation of more rate rises to come has pushed the Aussie dollar above 70 cents this week, and it's stronger against most currencies. However, more equity market volatility may actually see the Aussie dollar display its risk-off characteristics trump the widening interest rate differentials and further sell-off to come in the Aussie dollar if that happens. All in all, it may seem to be a good time to be cautious. Really cautious readiness is what we'd advise. If markets do fall further and valuations improve, being prepared to add to growth assets seems to be the best path from here. Thanks for joining me today. We'll be back next week with another Market Minute.
Any advice in this video is general advice prepared by Morningstar without reference to your objectives, financial situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.